What's going on, guys? Welcome back to the channel. My name is Mark and this is 360 Finance. So first off, my mic broke, or my cord to the audio that I typically wear on my shirt here broke, so I'm sorry if the audio sounds a little bit weird right off the bat. But in today's video, we're going to be talking about Lululemon stock. We're going to be going through their Q3 earnings report. We'll be diving deep into it. I'm going to be letting you know ultimately what I think about this stock, if it's going to continue appreciating, what I think about the valuation, and what I think they're doing as a company. I think it's been a very interesting time for Lululemon. Obviously, they have a lot of physical retail stores. So the big question for them was essentially, how was their online presence affected? And I'm going to be diving deep into that, but I think they did very well in my opinion. So this company reported earnings this Monday. This video is going to be coming out on a Sunday, the week after. Obviously takes a little bit of time to go through the earnings reports and formulate your ideas. So hope you guys find this video useful. If you did, don't forget to subscribe as well as like the video. And a very interesting thing, now that I'm recording this intro on the weekend, after they released their Q3 earnings, the stock was actually down nearly 20% on the week. So you might actually be able to buy it at a discount here, but I'm going to be diving a little bit deeper into the financials. Before we actually get started, I just want to let you know that about 90% of you guys who watch this content actually aren't subscribed to the channel. If you do get value out of this, please consider subscribing, and I would love to see you guys in the next video. Let's go ahead and get started. Okay, so now we're going to be going over Lululemon's Q2 earnings analysis from the second quarter of fiscal 2020 compared to that of the second quarter of fiscal 2019. So first things first, net revenue increased 2% to $902.9 million. On a constant dollar basis, net revenue increased 3%. Nothing really noteworthy there. Company-operated stores net revenue decreased 51% to $287.2 million. Now that's massive, and we're going to dig a little bit deeper into that in a second here. But if we look at their online channel, their direct-to-consumer net revenue increased 155% to $554.3 million, or 150% on a constant dollar basis. They also held an online warehouse sale during the second quarter of fiscal 2020, which generated about $43.3 million in revenue, and they didn't actually hold this type of sale back in Q2 of 2019. Gross profit increased 1% to $489.5 million. Nothing really noteworthy there. Gross margin decreased 80 basis points. Again, staying kind of constant. Nothing really noteworthy there. I think the positive thing here is that Lululemon has upheld how much revenue that they actually generated during this quarter compared to Q2 of 2019, and they basically didn't lose any money. If you look, their sales actually increased, or net revenue, mainly because they're able to maintain a strong, omnipotent channel distribution in terms of having to shut down their company-operated stores physically in person due to COVID-19. Income from operations decreased 26% to $124.4 million. Operating margin decreased 520 basis points, or 5.2%, to 13.8%. Income tax expense decreased 17% to $37.3 million. Diluted earnings per share was 0.66 compared to 0.96 in the second quarter of fiscal 2019, and this includes a $9.5 million of after-tax costs related to the Mirror acquisition, which reduced diluted earnings by about 8 cents. Another important thing to note for this quarter for the company is that they deferred certain corporate income tax payments and employer payroll tax payments. The most significant deferral was about $127.5 million out of Canadian operated income tax payments, which would otherwise been paid during the first and second quarters of 2020, and these have been deferred to the third fiscal quarter. So important to note that there is going to be a big tax expense on the next quarterly earnings results, something definitely to note here as we go into the next 3 months for the company. Lululemon also acquired Mirror, which is an at-home fitness company, during this quarter for approximately $500 million. Of that, $57.1 million is for paying continued employee wages for the next 3 years. So basically about a $57 million buyout for some of the employees and a total purchase price of $500 million. So Mirror is a leading in-home fitness company with an interactive workout platform that features live and on-demand classes. I think this definitely fits Lululemon's niche. Definitely a good strategic acquisition for them. Maybe they overpaid a bit, but their current ratio didn't decrease by too much, as we'll see in a second here. Basically, the acquisition of Mirror is going to bolster their digital sweat life offerings and bring immersive and personalized in-home sweat and mindfulness solutions to new and existing Lululemon guests. So in Q2 2019, their current ratio is about 2.91, and this quarter in Q2 2020, it's actually sitting at about 1.95, and it's a lot lower, like I just said, mainly because of the acquisition of Mirror, this at-home fitness company. This obviously left them with much less cash on hand. If we look at some of their competitors' price to earnings ratios, Lululemon sitting at about 79. A good comparable I like to make to Lululemon is Nike. They make the same type of apparel. Maybe Lululemon is a little bit more niche and catered to women or just athletic wear in general. I think Nike is definitely a bigger company and has a little bit more to offer in terms of total product offerings. But Nike's price to earnings ratio is sitting at about 70. Since Nike's a little bit more diversified, this probably makes a little bit more sense. But if we actually compare Lululemon to Adidas, which is similar in market cap, sitting at about 45 billion compared to Lululemon's 50 billion, Adidas is at a much higher price to earnings ratio. Other competitors which you may want to look into might include Under Armour, L Brands, and The Gap, although they have significantly less market cap than Lululemon, Nike, and Adidas. So as the temporary store closures for COVID-19 have resulted in a significant number of stores being removed from Lululemon's comparable store base, total comparable sales and comparable store sales are not currently representative of the underlying trends, states management. So they actually didn't provide investors with these metrics because they don't believe these metrics are useful in understanding their performance, basically saying, or if you read in between the lines here, their comparable same-store sales were much lower because they had to shut down all their stores for 3, 4, 5, 6 months, depending on the location. And you can kind of see that here. It's pretty representative in just the revenue. If you look at company-operated stores in comparison to direct-to-consumer, again, we're talking about that 51% decrease, where the direct-to-consumer channel had about 155% increase in total sales. I think this is actually pretty exciting for a company like Lululemon because it basically shows that they have that strong online presence and their business hasn't really faltered through this period of uncertainty. So the increase in net revenue from their direct-to-consumer segment was primarily a result of obviously increased website traffic, improved conversion rates on their websites. This was kind of offset by a decrease in dollar value per transaction, they state in their 10Q statement here, but the shift in the way guests are shopping continued in the second quarter of fiscal 2020 as a result of COVID, with more guests shopping online instead of in store, and they held an online warehouse sale, which we already talked about in North America, which generated about $43 million in sales, so pretty significant for the company. Last thing to just mention here is obviously most of Lululemon's operating locations are in the United States, and if we just look at North America in general, Canada and the US, that accounts for about 73% of total stores. So obviously North America and their economy has been shut down. There's been a lot of work from home mandates from governments. I don't want to get too much into that, but just the fact that most of those stores had to close down for a period of time and people were buying their stuff online instead of going into the store. So that just kind of supports the theory here of a strong brand. It's also important to note with the amount of stimulus packages, people might have just been buying excess clothing in the past couple quarters. So something of a risk there just to note. But overall, pretty strong brand, very strong online presence, which I think is an extreme positive for Lululemon. Okay, so we look at EPS consensus results. It doesn't show in this picture here, but Lululemon actually did beat consensus EPS results, coming at 66 cents a share, and you can see in this estimate on Yahoo, between all the analysts they follow, it was sitting actually below 60 cents. So they beat in Q3 2020. Looking at some of their annual financial trends, you can see here revenue has been consistently going up for the past 4 years, and for the most part so has earnings, although there was a little bit of an outlier or a drop off in 2018. The quarterly trend I think is quite expected. Well, actually I think maybe Q1 you wouldn't have expected that much earnings, but that's kind of before COVID happened. But Q2 here, you can see massive drop off in sales. Overall, analysts are quite mixed on this company. I would say the analysts which have revised their targets more recently are probably under the hold category, while about the other half is recommending buy or strong buy ratings. Currently, the recommendation ratings at a 2.1, just below a buy, and the average analyst price target is about $360. as this stock sits near $350 at the time of this video, I don't know how much value there is in terms of Lululemon continuing to appreciate. If we just look at Lululemon's maximum graph, they went public all the way back in 2007. The important thing to note is year to date, they had their massive dip like everybody did in March, losing about 40% on the year, but then rebounding from that low point almost 160%. I think the question here is, if we know that there's going to be this massive tax charge on their next quarterly results, we're bound to see a little bit of a loss. I think it's very possible that Lululemon does not beat the following earnings estimates, but we'll obviously check in on that once we get closer to their Q3, Q4 quarterly results. I think, again, the big question with Lululemon just comes to the down to a matter of value. We've already seen nearly 160, 150% appreciation since the March lows in this company. Is that really going to continue? We've seen a massive sell-off in tech the past couple days, and I don't know, after hours this thing's sitting at minus 6%. This video probably won't go up till the following morning anyways, but yeah, I believe in Lululemon as a company. I think they'll be around a long time. I believe they have a very strong brand. In terms of an investment and just valuation, I just don't think it makes sense for me personally currently. Okay, so that's pretty much going to be it for the video. Before we end it off here, I'm just going to say I think that Lululemon is a fantastic company. Their acquisition of Mirror is kind of interesting. I think that's going to definitely help increase their revenue in the future. Maybe they overpaid a bit. I think the valuation doesn't make sense right now for me, even though it dropped 20% on the week. If you're looking to swing trade this thing, maybe you'll see 5%, 10% in the next week. But if you're looking to buy and hold this thing long term, I think we're already seeing the peak of this company. Will it ever get as large as Nike at 175 billion in terms of market cap? I don't think so personally, but there is that opportunity, and they're currently trading at about $15 billion market cap. So I would ultimately rate this thing a hold. I wouldn't be shorting it, but I wouldn't be buying it either. So I hope you guys found value out of this video. If you did, don't forget to subscribe to the channel, like the video if you enjoyed it, and share the video with a friend if you learned something, okay? I will see you guys in the next video. Peace out.
Young age, learn how to get paid. Big stage, long way from session A. Big wave, he gon' have to get saved.